Good morning guys and welcome to Wolf of Dubai. Today I will show you why I'm buying more of Tesla stock, anything below $250. I will make a short stock analysis for you guys and I will tell you why I think it's valuable. You know from my other videos why I love Tesla as a company. They're super innovative, but today I will go more into the technical of the stock. So stay tuned, here we go. Alright guys, then let's have a look first on the Tesla stock. So basically this is the chart for the last 6 months. You can see, the highest here was in Jan at peaks almost at 350, and then basically it went down mostly because of negative news by the press that demand is not so strong and so on, and then it reached actually even up to under $180 beginning of June, where it bounced back. So here you can see nicely how it going to the direction to 250 again, and I think that's a very interesting chart, and that 178 was really an interesting time to go in. Let's have a look on the other things. Let's have a look on the 1 year or 5 year chart. So looking on the 5 year chart here, you see that basically we was already at the 250 mark 5 years ago. Then in general, Tesla is definitely a very volatile stock. It goes from 250 or 280 to 150, goes back up again, goes back down, then it went up again and stayed up over 300 most of the time, or below and just below 300, then again to 258. Then it went up again when the Tesla Model 3 production ramped up, and then when the negative news in the first quarter was not so good because of the tax credit, as well as the Q1 in car industry is generally not so good. It went down, and I think that's a really good opportunity to buy here. Everything below 250 to go back to at least 300 and 350. Let's have a look on the overall picture of Tesla. You can see in the last, since this is 2nd July of 2010, which was $19 for one stock of Tesla, we are now at 200, so it's like 10x within 9 years, and this is actually what I want to talk about as well. So basically I believe that the Tesla stock will 10x in the next 5 to 10 years. So something like this will repeat, or I think it will repeat. So you can never know with stocks obviously how it develop, but I think exactly now it's a very good time to move into the stock, because we are under the levels of 2000 or we at the same levels at 2016, and 2016 they didn't had the ongoing gigafactory building in China, which will start end of this year, didn't had Model 3, didn't had ramped up production, and so I think it's a very, very interesting time to go into Tesla now. And this chart, it's always a good sign when it's going up down for a couple of periods, that it will go up or down, and the factors looks like it will go up. Okay guys, let's jump into some numbers. So first of all, let's jump into the revenue. So I'm in the stock business for at least 10 years and I haven't seen something like that before. This is actually the website called Macro Trends, which have extensive business figures, which is very, very good, and a very good overview. So have a look at that. So 2017 Tesla made almost 12 billion revenue, which was almost a 70% increase from 2016. 2018 they had almost double that number in revenue, and they just ramped up the Tesla Model 3 production. So you can imagine that they at least will have around $30 billion in market revenue, which is huge increase year over year. Now comes the additional factories and production lines also in the US. So I think this number will just grow very, very fast, very, very high, and that's why I love Tesla very much, because in the end you are looking into the revenue as one of the most important things from the company. So let's go as next to some ratios. Let's say following. So basically you have $20 profit per share and you have a stock price of 200. That would be PE ratio of 10, which means that within 10 years they would make so much profit per share that they would, cover up the stock price. So 10 times $20 profit would be 200 stock price. So that's the ratio. However, Tesla don't have a PE ratio because they just don't make any profit. So you can see here also the other years they didn't have any PE ratio. So let's jump into the PS ratio, which is basically how much are they worth against how much revenue they make. So imagine that. So the Tesla, as you have seen, make almost $22 billion in revenue, and they are worth around, currently I think around 35 to 40 billion dollars. This would be almost PS ratio, price to sales ratio of 2, which is quite cheap. And you will see it here, they was quite expensive in terms of here, even 8 times, the stock price was 240, and they were making not so much revenue in 2015. So the price ratio was quite high, and it's even 20 here in 2012, making so less revenue versus the stock price. So I think this is a very good evolution, and that's why I think Tesla is also quite cheap. Anything below 250 you can easily buy. Over it, I would say short term, it can go down to 150 again. So from the stock price, I would say it doesn't matter if you are a long-term investor, then I think it's very, very good time to buy it. And last thing I wanted to show you is the financials. So basically, if you can see here, these are the balance sheets, and I want to go to cash flow statements. Cash flow is basically the available money that the company has to spend and to have from general business operations. So you can see here the cash flow. The net cash flow actually stayed positive the last 3 years, which is very good. And something like this, Amazon had for years as well, which is always a good, sign that basically, though they're making no money, they have cash to spend and making positive cash flow. And this is very, very important. So that was it. Let me know what you think. Comment and please subscribe. I'm appreciating everyone who is following my channel, and don't forget, the grass is greener on the other side.